Number 6, non-disclosure of secured bond for deferred custom tax duties. Again, there are a lot of things. The more you go through this auditor's report, the more you wonder why the financial statements are presented the way they are presented. The audit identified that the Ghana Revenue Authority and the Controller Accountant General Department failed to disclose bonds issued to the government as security for deferred customs tax duties in the whole of government account. Again, this amounted to about 2 billion Ghana cedi as at 31st December 2023. Okay? And the whole government account does not accurately reflect the government's financial position, particularly its contingent assets or financial guarantees. Because this is money government is likely to receive. Because they've issued a bond on custom tax duties that they are likely to pay in the future. So it's a contingent asset that must be recognized in the financial statement. But hey, it's not recognized. So these bonds represent a form of financial guarantees and contingent assets, crucial for assessing the government financial risk exposure and potential future inflows. Lack of proper disclosures suggests either an oversight, a misunderstanding of financial instrument disclosure requirement, or a deliberate omission that obscures the true financial picture, thus misleading stakeholders about the government's collateral and potential revenue streams. This impacts the government's ability to demonstrate full accountability for all forms of financial instruments it holds or manages. You cannot breach the IPSAS in the preparation and presentation of financial statement, because IPSAS 28 to 30 gives us information about financial instrument recognition, measurement, and disclosure. So why are you not doing it? And the Auditor-General is saying that a couple of things. Maybe it's an oversight. You didn't see it. Or lack of understanding of how financial instruments should be accounted for. Or a deliberate omission in order to obscure the reality of what is happening in the financial statement. And that is the thing we need to understand there in that case. Next one. Poor recovery of loan receivables. Yeah. The government lends money. Okay, so poor recovery. So a critical finding of the audit pertained to poor recovery of loans receivable by the government of Ghana. Out of a total of 63 billion, okay, give and take outstanding as loan, only 43 million, representing a mere 0.07 was recovered. That is really some way, right? This left an overwhelming outstanding balance of 61.1 billion, representing 99.93% of the total unrecovered. Government has lent money, but government is not collecting the money. Now, the poor recovery rate was attributed to the unavailability of debt collection strategy and a lack of consistent follow-up by the Controller Accountant General to the various covered entities and countries indebted to the government. Controller Accountant General, what are you doing? Are you not having the right staff there? Do you not have the enough people there? Then let's employ more people. People are owing, other covered entities are owing 61 billion, and you are not doing any follow-ups? You don't have any recovery strategy there? Why is this important? Because if care is not taken, these debts would have to be written off later on in the financial statement. Now, the key question you need to ask yourself is, who does government lend the money to? So I'm going to go through a number of things with you there. The category of people or category of entities, the government on lend loan to entities. So the government's, these include entities like Ghana Railway and Port Authority and local authorities. Okay? Statutory boards and corporation. That is a lot of state-owned enterprises and statutory bodies like State Farm Corporation, News Time Corporation, Ghana Enterprise Development Commission, Agriculture Development Bank, State Transport Corporation, National Investment Bank, Ghana Post, Ghana Water and Sewage Corporation, Ghana Airways Corporation, Ghana National Petroleum Corporation. The list is very tall. Private entities and companies. The government also lends money to a wide array of private companies across various sectors. Examples include Ghana Sugar Estate Limited and its branches, Africa Timber and Plywood, Mackenzie Fisheries, Quality Grain Co. Limited, Cummins Power Generation Limited, Home Finance Company, and various manufacturing and industrial companies like Prefarm Concrete, Achimota Brewery Company, National Oil Palm Plantation Limited. Okay, then we have others. Financial institutions like Joabin Rural Bank, Fidelity Bank Limited, EcoBank, Cal Bank, energy sector companies like Sunun Asogli, Aska Energy, Car Power, ECG Loan Recoveries. Like the list is pretty tall. Then other governments, right? The government of Ghana has also extended loans to other sovereign nations, specifically the Republic of Guinea and the Republic of Upper Volta, which is Burkina Faso. These loans are granted by the government of Ghana to these covered entities to support their efficient and effective operations. So these are the list. Are you getting it? So Ghana to state-owned enterprises, other entities, private organization or private institutions, other countries, and Controller Accountant General is not going after the money. It's not going after the money. There is no recovery strategy. And this money, 61 point whatever billion, is with these people. The whole of 2023, government collected 0.07%. Literally, it's like we are dashing the money to the people. No. There has to be recoveries strategies there. So the Auditor-General said the abysmal recovery rate of loan receivables represents a colossal loss of public funds and a severe deficiency in the government's asset management and debt collection strategies. This indicates a systemic weakness in lending practices, follow-up mechanism, and potentially a lack of political will to enforce repayment. Yeah, political will. Maybe some of those private institutions, there are some government appointees who have some interest in them. That's why they were able to get the loan. Maybe some of those public corporations, their boards will be appointed definitely by the government. So, they are reluctant on bringing them, and, it's like coming to wash our dirty linen in public. They don't want to do that. So there is lack of political will. Okay. Now, the Controller Accountant General said, hey, listen, they form a committee to put steps in place. But the Auditor General said, that's not what is needed. This issue is not merely an accounting problem, but a critical governance and fiscal sustainability challenge. Critical governance and fiscal sustainability challenge. And so when it comes to the accuracy of the statement of financial position and fair presentation of the statement, these are some of the things that Auditor-General raised concern on. And you can see practically that a lot of the things are not just accounting issues, but also the way political factors may be playing a role here for some of the things, right? Because some of the things will paint the government in a certain way, or some of the things may not inure to the benefit of people who are put into places of position, especially the last one that we looked at, the debt collection issue. And all of these are crucial things that you need to understand. And so if you are writing public sector accounting and finance, advanced audit and assurance, you are looking at management, accounting, and financial management, these are some of the things you need to understand. In the next episode, we are going to be continuing and looking at the second part of the auditor's report, and we are going to be focusing on issues affecting financial performance and accountability. And there also, you're going to be seeing some few key issues that you need to understand. Remember, everything you are doing in class, in this ICAG professional qualification program, is not just something you are learning out of the blue. It's actually what is going on in practice. It is actually what you are going to be doing when you are in practice. And so it is to merge that classroom experience with what is practically seen in the auditor's report, so you can put yourself in the position to go into the exam hall, write the exam with confidence, and most importantly, pass the examination. And beyond that, be equipped with practical skills so that if you are put into the position and you are the one responsible for preparing financial statement, you will not say, hey, I won't do impairment testing. What the heck? You're supposed to do impairment testing. You're not going to say, oh, we have assessed property rate or tax payable, but we will not recognize it in the books. You will not say, oh, we were not able to reconcile something before financial statement was prepared. No, it was supposed to be reconciled before financial statements are prepared. And these are the things that you must understand to put you in the position so you can become successful. Thanks for watching. Thanks for listening. And I'll catch you in the next one as we continue with this discussion. Remember to like, subscribe, and share the video with others. And I'll see you in the next one.